Hi, and welcome back to Aklilu Real Estate. Thanks for tuning in. This is Aklilu, and today I'm going to be answering the question, how do rising interest rates affect my home loan? So, how do rising interest rates affect your home loan? If you have not put a contract on a home and started the process of purchasing a home, well, a couple things. The main thing is this: your purchasing power may and is most likely going to diminish. So when interest rates rise, if you haven't locked in your interest rate, the amount that you are approved for or qualified for. So in this case, let's assume that you are pre-approved for $500,000, and it is at a certain rate, and that rate now changes, and you're still looking for a home, haven't found a home, or have an agreement in place with a contract on a property. Then once the interest rate moves up, then what happens is your purchasing power is going to lessen. So, instead of being qualified for $500,000, you may find yourself being qualified for, $485,000, or maybe $475,000, or maybe, whatever that number is going to be based on the movement of the interest rate. So I know this was a good question because we do anticipate that we are going to be entering an environment of rising interest rates. Now keep in mind, the Fed is most likely going to be raising the Fed funds rate. That's not actually the 30-year fixed rate. However, it does correlate to mortgage home loans and home rates. So most likely you're going to be, and hopefully you're getting a 30-year fixed rate. So once you do lock that in, it's fixed for 30 years. However, if you're not locked in yet and you're approved, it's good to, obviously anticipate this rising rate environment. I'll be more than happy to offer you insight and suggestions. I used to be a banker. I think I had mentioned that already before, and most of you know that if you're my clients already. But that being said, there's always things that we can do to try to anticipate, but we can't change certain things that exist within the market. However, and this is not something that I would recommend, but if you do, for example, if we find ourselves in a interest rate environment where we've seen, the home mortgage rates rise by, say, 0.5% or more, then, we should ask certain questions. How long are you going to be in the home? And if you know you're not going to be in the home for a very, very long time, let's say not more than 7 years or 5 years, there are other types of, loans that you could potentially explore where you're fixed for those periods of time, but then they adjust within certain caps afterwards. Again, it's not something that I recommend. You'll speak with your loan officer about all that. But anyways, that being said, feel free to reach out to me, email me, call me, text me, and I'll be more than happy to go over these things with you. And thanks for tuning in. Thanks for the question. Good question. Remember to like us here on our YouTube channel, as well as follow us on Instagram and some of the other social media. Okay. Thanks so much.